Good morning or good afternoon, ladies and gentlemen. A pleasure to be here today and give an update on Pan American Silver. Quite a few changes over the last few months, of course, with the transformational transaction with Yamana Gold. But let's start and give you an update here on the company with a few slides first. Please keep in mind I will use forward-looking statements in my presentation. You can read everything about risk factors on our public filings. So who is Pan American Silver and how did the company change? Well, the company is just shy of 30 years old and has been founded by Ross Beaty in 1994 to offer investors access to silver, to the silver market, which at that time was very difficult to do. In the last 30 years, we grew to the second largest primary silver producer in the world, but we also produce a substantial amount of gold, all in Latin America. You see here on the map our operations. The reason why we are working in these places geographically is really the geology. Most of the silver, a large part of the silver projects in the world some are correlated to the Cordillera all the way up from southern Patagonia to Alaska. So that's why we are located where we are. Biggest silver producer in the world is Mexico, followed by Peru, but a lot of silver production, of course, historically in Bolivia and Argentina has the name from it. With the transaction of Yamana that we announced that in November last year, and closed the transaction end of March this year, 2023. We added quite a bit of silver production, actually just about another annualized 10 million ounces of silver production to our portfolio, but also a substantial amount of gold through 4 large mines. Jacobina, the largest one in Brazil, El Peñón in northern Chile, big silver gold producer, Jacobina mostly gold producing. Minera Florida in southern Chile, which is the smallest, or central Chile, sorry, which is the smallest one. And then Cerro Moro, very large gold silver producer, probably the highest grade producer in Argentina, in southern Argentina and Patagonia. So these are the additional mines to the former Pan American mines that we already had in the portfolio. You see in the circle graph there our projected annualized revenue of just shy of $3 billion. Of course, that depends on metal prices, but very important, you see the diversification and added diversification from this transaction with Yamana. So very nicely distributed throughout 8 countries where we are actively working. So very important that we have this diversification into different jurisdictions in Latin America. Our guidance for this year, and keep in mind this is 12-month guidance for the original Pan American assets and only 9-month guidance for the added 4 mines I mentioned from Yamana. 21 to 23 million ounces of silver production. This comes largely from our mines in Mexico, Peru, and Bolivia. And about 870 to 970,000 ounces of gold. This comes mostly from our mines in Mexico as well, in Canada, in Peru, some gold mines, and then, of course, Chile and Brazil and some Argentina. So very interesting cost structures. On the silver side, we predict cash cost of $10 to $12, all-in sustaining costs at $14 to $16. And on the gold side, cash cost of $975 to $1,100 per ounce, and all-in sustaining costs of $1,275 to $1,425. That includes all sustaining capital, all the costs. So our all-in costs really include all the costs from finding new ounces in our exploration, preparing it, developing, mining it, and selling it either in form of doré bars or in form of concentrate. And another point important here, we show our production always a silver segment or gold segment. So depending if a certain mine produces more silver and gold, it will be in the silver segment. If it produces more gold than silver, it will be in the gold segment. And the remaining metals of each of these operations will be used as a byproduct credit against our production costs. So you're never going to see in Pan American equivalencies. Every ounce of silver I mentioned is real silver. Every ounce of gold is real gold. We're not using equivalent ounces like many other companies do. I think this is very confusing if you do so. So this is real production for each of the metal. So again, this forecast is just 9 months for the Yamana assets that have been added as of April 1st this year, as that's with the date or 31st of March when we close the transaction. So 2024 will be the first year of all the operations together and a full year of production at that time. We're in a very strong financial position. Very important, of course, for a mining company. There's a lot of capital and projects to build, and we have a large project capital pipeline. We have a very strong working capital, $826 million. That includes a $513 million cash and short-term investment. All these numbers are as of end of the first quarter of 2023. Through the transaction, there has been some debt added. You see there $1.187 billion debt. Large part of that is our 2 bonds that came to us through the Yamana transaction. Very low cost debt. The biggest one is $500 million. The coupon on that is 2.6%, and maturity is in 2031. So we have also drew some money in our line of credit to close the transaction. But when you look historically at Pan American, we always run the company at very low debt level, lots of time at no debt at all. And there will be similar efforts here. When you look at capital allocation in the company, our focus always first and foremost, run the company at a very strong balance sheet. Second, investing in very high quality projects, which is of the biggest upside really for you as a shareholder or potential shareholder. And then the third one is return to shareholders in form of dividends, a few share buybacks way back, but mostly dividends that we prefer as a vehicle to return value to shareholders as well. So you can make a decision how to further invest that money. Our line of credit is actually sustainability linked. So that was the first sustainability linked line of credit in Canada, which means that the amount of interest we pay is linked to our ESG performance. So very good measure to lower our cost of capital through our strong ESG program. And as I said, we're very well funded. Always working on having a very strong balance sheet, even after the transaction, that has not changed. One of the really big projects that we have in our pipeline, and that's La Colorada mine. And maybe I step back quickly a few slides here if I can, just to give you an overview really where the mine is located. You see La Colorada here in central Mexico. The mine is with Pan American since the 90s. Has been a really strong success story for Pan American. When we purchased the mine, there was hardly any reserve. Through a lot of exploration, and this is on the top, like a narrow vein deposit. It's a high-grade silver mine, silver and base metals. The veins are probably 1 to 3 meters wide, and after a lot of exploration, we have been able to reserve up over 100 million ounces of silver. At that time, that was somewhere in the year 2008, 2009, we decided to expand the mine and expanded it in two different events, all the way up to about 2,000 to 2,200 tons per day. Produce somewhere around 5.5 to 6.5 million ounces of silver at that asset from those narrow veins. We made that big discovery deeper down called the Skarn deposit. It's a geological term for a deposit that is located in limestones, much wider ore bodies there. And I'll just go back and in a second here and show you a few more slides and photos on that Skarn project, which is really, really exciting. But before I do so, maybe just quickly the different types of deposits we have. Dolores mine in Mexico is an open pit operation. So are Shahuindo and La Arena in Peru, which are both run-of-mine heap leach. Boron, Morococha are underground operation. Morococha actually on care and maintenance as we speak. El Peñón, Minera, Florida, Cerro Moro, underground. Manantial Espejo is mined out, but was a mix between underground and open pit. And San Vicente in Bolivia and Jacobina in Brazil are underground operations as well. Through the transaction, we received the very large copper-gold porphyry project Mara in Argentina, and we also have probably the largest undeveloped silver deposit in the world, Navidad, in Argentina as well. So that's a bit the geology or the mining of the different deposits. But let's now focus on the Skarn here. As I said, the Skarn deposit below La Colorada, and I have a few slides on that I would like to share with you. So the mine is in production since about 40 years. It was a very small operation. As I said, after we had a successful exploration program in somewhere between 2006 and 2009, we expanded the operation. It's our biggest silver producer right now as we speak. But we started to do deeper drilling below the narrow veins and found that Skarn deposit. And you see this huge size. We published last year a resource of just shy of 250 million tons of underground resource for that Skarn. Here you see the grades for this. Of course, it's much lower grade than the narrow veins that we are mining, which normally run more in the range of like 270 to 300 grams silver per ton. But we are talking about a much larger development project here in the future at La Colorada. And maybe it's easier if we look at it here on a plan. So on the left side, you see a cross section through the mountain. You see here the mountain top. You see our levels, mining levels. Right now we are mining down in this level here. It's about 530 to 540 meters below surface. So this is the narrow vein. This is actually our large silver mine, La Colorada. So that's where all the silver right now comes from, our production from those narrow veins. Now below you see in green and red this large Skarn bodies. There are 3 bodies right now that make up as such a short of 250 million tons of resource. So very large ore bodies, very large intercepts. When you look at our press releases, you will see that, compared to the 2 to 3 meter wide veins that we're mining on the top part right now at La Colorada, down here we have drill intercepts that are up to 300, 350 meters in width, because these are just massive ore bodies, and of course will completely transform La Colorada's mine in the future. So at the moment we are just finalizing another set of drilling here. You see here a plan view on the right side, and we are drilling around this red ore bodies and green ore bodies. They will still get bigger. We did not find the end of it yet, and we just step out drilling and publish new resources probably about once to twice a year. But right now we're working on a PEA, on a preliminary economic assessment, which will come out later this year, probably in Q3, which will give really for the first time an idea how it looks like as a full project with cost, with capital. This is a very large deposit, for sure the largest and longest life operation Pan American will have. At the moment, we are looking probably somewhere in an underground production of let's call it 25 to 35,000 tons per day. So that compares to the 2,000 to 2,200 tons we're mining right now. Of course, it will be lower grade. It will be a very large silver and base metal producer. And even at that large throughput rate, it will probably run beyond 40 years. So very, very long mine life, something that you're really looking for, big cornerstone asset for Pan American, which will take, a few years to develop and large capital, but a large mine, long capital, all discovered below our best silver mine. So we didn't have to buy anything here. This has been all done in-house. So stay tuned for the preliminary economic assessment, as I said, that will come out in Q3. Will be a very interesting addition to Pan America's portfolio in the future. So what do you get with Pan American? Well, beside a strong balance sheet and a strong production profile, large mining company, we have actually one of the largest silver reserves in the world. You see there about 515 million ounces of proven and probable reserves, and nearly 1 billion ounces in resources as well. So very large projects in our portfolio, very large silver reserve in most mines, way beyond 10 years of mine life. So really important. Through the acquisition of Yamana, there's another 112 million ounces that comes in addition to that on silver reserves. It's not included yet. Will come out in new reserves mid of this year, like every year, and will include the Yamana assets by then. And of course, we have a large reserve of gold as well for our gold-producing mines. I mentioned a little bit Escobal, and I'm sure we'll talk about that later on. But Escobal, the largest already built silver mine that is currently on care and maintenance, awaiting a consultation process that happened actually before we even purchased the mine through Tahoe Resources. But Escobal was producing before that for just short of 3 years and produced just a bit more than 20 million ounces of silver on its own. So bringing that mine back would actually nearly double our silver production. So another really, really major project that's not going to require a lot of capital and is, pretty much ready technically to restart, as I said, once the consultation process has been completed. And with the last transaction, as I said, we got to a size and a market capitalization that is really on everybody's front page, I would say, when you look at the silver producing company. It is a very well traded company, probably liquidity around $100 to $120 million for many days, and the average just shy of $100 million. So very easy name to trade in and trade out, and for sure the to-go name if you want to invest in silver. An incredibly important metal when we look at energy transition and reduction of carbon footprints in the world, electrification. Of course, you can only build solar panels with silver, but and that has been actually the biggest single use. About 15% of the world production last year has been used for production of solar panels. Of course, that will grow in the future. But every electric component has silver in it, from your smartphone to your TV or computer, and your car, and your electric car, of course. Any kind of electronic componentry has some silver. The silver is in the soldering because it's the best electric conductor. So silver absolutely essential for the electrification in the world, and you can just think about all the different uses of it on the industrial side that are to grow over the coming decades to make that change into a more electrified world. At the same time, silver is still money, vehicle for investment to store wealth like gold, and last but not least, about 25% of the silver production is used for for jewelry production. Just a few other projects we are involved in. We just own shy of 10% of New Pacific, a company that has been very successful in exploration in Bolivia and discovered the silver sand and Carangos projects in Bolivia. So still, I would call it mid-term exploration projects, but very interesting, large-scale silver discoveries there. So we'll stay tuned on those. La Reina 2, which actually sits below our current La Reina gold mine, which is a large copper gold porphyry that probably does not fit in our portfolio once the gold is mined out, but for sure a very large copper and copper gold deposit that can be developed either by Pan American, by a mix of Pan American and a partner, or by somebody else if we decide to divest that project. And then Mara, 56.25% joint venture together with Glencore that came to us through the acquisition of Yamana. Very large, much larger than La Reina 2, kind of world-class size silver gold porphyry in Argentina. ESG, and I want to talk a little bit about ESG. You see there a slide on all the disclosure and performance we have. You see some of the rankings. We're ranking, I would say, most of the ranking agencies somewhere in the top 10%. Some of them were in top 15. Just different ways of looking at it. But ESG has been always very important to us way before really everybody talked about it. We actually published our first ESG report in 2010. We already published Scope 1 and 2, Scope 2 greenhouse gas emissions at that time, so way ahead. And for us, ESG was always, the way to work with the communities around us, where we are active in Latin America. It has been crucial for us to be successful in many places where we work. Now there's a lot of ratings and rankings, but as I said, we have been very active on that front way before everybody talked about it. And I'm going to close with this slide, and we'll open for questions then. But what you get with it, with Pan American long life silver reserves, that's the lifeblood of any mining company. A lot of projects, some are short term, some are long term, some are very long term, like La Colorada Skarn, that's going to run for, as I said, way over 30 and 40 years. As a mine, you get a very strong ESG performance. The management team actually together for nearly 20 years. We built most of the mines before the transaction of Yamana that we had in the portfolio, so we are a very strong mine building team. And of course the balance sheet, which helps to put everything into production and build out what we have and expand. That's only possible with a strong balance sheet. We're paying a dividend. Right now it's yielding about 2.7%. But of course, most shareholders buy Pan American shares for the exposure to growth and not only for the dividend, but we pay dividends since 2010, and we absolutely plan to continue paying dividend here into the future. And with that, Jasper, I would like to open it for your questions.
Thank you for the excellent presentation, Michael. We will now move on to the Q&A session, which will be divided into 4 main parts. First is the introduction, where we ask questions about Michael and his track record, as well as talking about Ross Beaty's legacy. Then we will move on to the 3 pillars which constitute Pan American Silver's investment case. First, we have the transformational acquisition of Yamana Gold, then Pan American's assets, which include large operating mines such as Jacobina, El Peñón and Shahuindo, and large development projects such as La Colorada Skarn, as well as the Tier 1 silver asset Escobal, which is currently in care and maintenance and provides tremendous optionality to Pan American shareholders. And then lastly, we will talk about Pan American's strategy, portfolio management and its vision. Michael, you have worked for Pan American Silver since 2004 and you have a PhD in geology. Could you tell us a little bit about your background and your journey in Pan American?
Sure, it has been quite a long one. I actually As you mentioned, I'm nearly 20 years with the company. Originally, I grew up in Switzerland. Actually, grew up on a farm, and it was always, my passion to be in the outdoors. I love that. Another one was that I have been always fascinated by South America since I'm a child. I don't really know why, but I always liked and was fascinated by that. And for me, a combination of those two passions, I kind of thought, well, what could be easier than studying geology and actually go and live there and enjoy that, that lifestyle of being outdoors, traveling the world, and living in Latin America. So that was really kind of the backdrop of my decision to study geology, which I did in Switzerland at the Swiss Federal Institute of Technology, where I got my master's and a PhD. But the important part, I think, for my career was that all the field work was done in southern Ecuador. I spent every year about 4 months in the field. I'm a strong believer that geology has to be done through field work, solid field work. You can't replace good observations with any computer model. It just does not work. I know that a lot of geology careers are focused on computer models right now, but I really think exploration has to be based on solid observation. So field work really important to me. So I spent a long time in the field in South America, and that was really the base of my career. I then worked mostly in greenfield exploration, somewhere between Ecuador, Peru, and Chile, and then moved for about 7 years to Lima and changed actually over into production and production geology because I was fascinated by the entire business and not only the discovery part of it. Ended up in business development at the end in Lima, and then got a call from Ross Beaty, who was the founder of Pan American Silver, to join the company, very small company at that point, in Vancouver. I moved with my family to Vancouver and started actually as VP of geology, worked my way up and became president and CEO at the beginning of 2016 for the company. So quite a journey, always very focused on Latin America. So I spent all my career, lived and worked there all my career. And I'm not the only one. We have a large team here that is, has been in very similar situation. Something that is very dear to my heart, and it's very important for us that we actually form part of it and not just work there, but we are part of the Latin American life and culture with our operations.
What would you consider to be your greatest achievements?
Well, look, lots has happened in 20 years, of course, but I really think it's the formation of our team, which is the biggest achievement. I think we have a very, very strong, very well regarded team in the mining industry. As I said, we're working together for a long time. Most of the mines that we had pre-acquisition of Yamana, we either built or expanded internally. So we are a mine building company. There are not many out there in the world. And we have been successful doing so. Thanks to that strong team, we have been able to do 2 major transactions under my leadership, which was the Tau Resources transaction, which closed in 2019, and then, of course, the most recent acquisition of Yamana Gold, as I said in my presentation, which closed at the end of Q1 2023. But without the team, this would not be possible. But those, that long work over 20 years and then those major transactions really changed the company and transformed it into a world leader for silver and gold production in Latin America.
You mentioned that Ross Beaty founded Pan American, and he was the chairman until 2021. What would you say is his legacy, and in what ways has he shaped Pan American into the company that it is today?
Yeah, look, Ross started the company, as I mentioned in the presentation there, because he wanted to provide investor exposure to silver. At that time, a metal that he already believed will be very important in the future. Ross is always, probably 1 or 2 decades ahead of most other people, and the same on the silver side. He kind of saw that importance at a time where photography just was in the transition to digital photography, and for the older people in the audience here that remember that silver use was mostly in the past based on photography use, and of course that changed, and silver was kind of suffering for a while until really this new phase of industrial uses came on for silver on the electronic side. So Ross kind of saw that coming. He wanted to provide that exposure, and he started Pan American in 1994. He was also the first CEO of the company. I'm only the third CEO, and Jeff Burns was the CEO in between. I worked for Jeff a long time. And I think you have to look at all three of us as kind of one group that really grew the company where it is. Interesting enough, we are actually by education, all three of us geologists. That's quite unusual in the mining industry. We all of us have a finance or business degree as well, including myself. So that helps to obviously understand the business complexity and work within there. But having a technical background, especially if you deal with large transactions and building of mines, etc., it's incredibly important to understand. I worked a long time underground as a mine geologist as well, so I know what has to be done. And a large part of our team has the similar background. They're either mine engineers or metallurgists or other different technical backgrounds. But that's really what helps to make the right transactions, make the right decisions, and really understand what's going on on each side. But yes, Ross retired in 2021. He's still a very large shareholder with the company. He's now our chair emeritus, and has been a very important person in my career. A person with a lot of vision, a lot of ideas how to build a better world as well. He's a very big philanthropist, focused on nature and nature protection, etc. And that's really what he dedicates his time right now to.
We will now move on to the first pillar of Pan American's investment case, the acquisition of Yamana Gold. In March this year, Pan American closed the acquisition of the large gold producer Yamana Gold, excluding its Canadian assets that Agnico Eagle Mines instead purchased. In the acquisition, it acquired 4 operating mines, of which 2 of them have large net present values, Jacobina and El Peñón, and they also got 56.25% of the major copper-gold molybdenum development project MARA in Argentina, as well as some exploration projects. This has significantly increased their gold and silver production, which is seen here, and they also inherited $675 million of debt through 2 low-interest bonds with long maturities, which has lowered their average weighted cost of capital. In other words, this acquisition has been transformational to Pan American, which is why the next set of questions will revolve around it and investigate how it impacts Pan American. Could you explain just to viewers the rationale behind the acquisition?
Sure. And when our business development team is looking at opportunities all the time, you can only grow or replace your reserves with either exploration, which we do on the brownfield side, and try to replace our reserves every year at our existing operations. By the way, they've been really successful doing so over the last 15 to 18 years. You can make a new discovery like we did at La Colorada. That's helping you to build a new mine. That doesn't happen very often. It's very difficult, and you're in a very lucky situation if that's possible. Or you go through acquisitions, and there it's very crucial that it makes sense and that it's accretive. If not, you just buying something for the sake of growth does not make any sense. But when we started looking at projects, we always do the same. We have a very large database. We look at every silver and silver gold deposit in the world and keep a database on that. And we focus just on the highest quality. Not all of them are possible to do an acquisition on, but you have to focus on the technical quality of the project. That's the base of our industry. Once you identify them, you look at the ones that would be a good fit. Right? It doesn't really make sense for us to go to West Africa or to Turkey or so. We are a Latin American or Americas focused company. That makes it easier. It's a clear focus for our shareholders, and much easier to work just across a few time zones. The Yamana came up quite a few years ago as a really good fit. It's just producing a lot of gold, but a major silver producer in Latin America, right in our background. We are already active in Argentina, so that's an overlap. Chile and Brazil are new to it. But when Yamana received an offer, and I actually talked to Yamana probably at the end of 2021, I started discussions, so way before Gold Fields came in. But just about a year ago, Gold Fields announced that they wanted to buy Yamana. The market really didn't understand that transaction. It didn't make that geographical or logic sense for a lot of shareholders, and the offer kind of went sideways and opened the door up for us to come back in. The issue was that the large gold production in Canada, Malartic, which is 50% owned by Agnico, and it was 50% owned by Yamana, did not really fit into our portfolio. So I found a way to do a three-way transaction, which is very hard to do and doesn't happen very often, where Agnico Eagle paid a premium for the remainder 50% of their operation in Canada, and we bought the Latin American assets at a discount, which for us made a lot of sense. And as I mentioned before, doing accretive transactions is very important. So this transaction is accretive to NAV, it's accretive to cash flow, it's accretive to our resources, for sure, to the gold reserves, and that's really crucial. And on top of that, because we are in similar jurisdictions, we're looking at at least $40 to $60 million synergies per year for this transaction, talking about $400 to $600 million over 10 years, and that's mostly on G&A savings alone.
Okay, so you're targeting 40 to 60 million post-tax synergies. Would you like to add a little bit or explain a little bit further on what the majority of the cost savings are made up of?
Sure. Well, Yamana had a very kind of a high-cost G&A structure with a very large office in Toronto. We are based in Vancouver with quite a modest and smaller office, so large of the savings come from there. Of course, when you do a transaction like that, you don't need two presidents or two CEOs, etc. We maintain the whole management structure further down because it's very important for us to have the teams in place to run our mines. But that savings that in Canada largely, and then of course some overlaps in Argentina, which really helps us to harvest those synergies. I think there will be more synergies down the road. That's just the short term, and I think large part of it we already realized in the first what is it now, just 2 months of ownership. There's more purchasing power for a larger company that comes with synergies, of course, in the future. And there's some synergies on the exploration side as well. We are actually really focusing always on brownfield exploration, replacing reserves, and not so much on early stage greenfield like Yamana was. So that's probably another piece of synergy that we're going to see here in the future.
You mentioned that Yamana's management won't be Yamana's top management won't be leading Yamana, but when it comes to lower level managers, chief geologists, mine general managers, etc., have any left in connection with acquisitions, and how will you integrate the teams?
Yeah, look, the integration is going very well. Of course, there's always big changes that you see at the head office, and that's really the major change. Locally, not so much, especially not at the mine level. We didn't make any change at the mine level. These operations have been run very well locally, and been very happy. And with the integration is going really well. I personally actually have been at each of the new operations already twice. Um, a large part of our team spends much more time there than I have to do. We just had a big management meeting a couple weeks ago where we brought large part of the mine management up to Vancouver, so everybody gets to know each other and starts working collaboratively together, exchanging information, etc. So we're a very hands-on company for that, and involve our people. We are very decentralized and really rely on technical knowledge and ability of our local teams. And as I said, I've been always very impressed by the teams at each site, and that's really what we are building on. So we don't need the whole top structure, but further down and on the operational level, everything is intact and it's working very well.
With Yamana transaction, you got 56.25% of the giant copper gold molybdenum project Mara. What are your short-term and long-term plans for Mara?
Yeah, it's a very large project, actually based on the copper porphyry Agua Rica and the installation of the former Alumbrera mine. So they go both together. Actually, it was a joint venture with three parties last year. It was operated, and the biggest majority owner Yamana at that point, 56.25%. Newmont was holding 18.75%, and Glencore the remainder. Last year, Glencore purchased a piece from Newmont. I think they paid about $125 million at closing in cash and about $30 million in deferred payments. And this was right during the due diligence for Yamana that we did, and we just applied to our piece the 56% kind of a similar valuation. That's about $400 million, and that's what we use as value in our assessment and our valuation and due diligence for Yamana. I think it's a very high quality project. That was just easy to use that as a parallel calculation for the valuation. But we're spending our time to understand better how to optimize that value for our shareholders. Copper, obviously, not a metal that we are really focused on. We are a silver company and producing some gold, but we're producing a little bit of copper. But building a big copper asset is probably not our primary focus. But as I said, at the moment, it's important to understand everything, understand all the assets that came new to us, and then make decisions later on how we optimize that value from the new portfolio.
If we stay on Mara for a little while, so there was a plan to release a feasibility study in the first half of this year. Is that still active?
Yeah, it's nothing changed on the budget really. The budget has been approved before we took over Yamana, and the budget between at that point Yamana and Glencore in the joint venture, and that will continue. Feasibility is planned for later this year. There are a few delays and a bit more time that is needed to do all the work, but it should still come out late in this year. So really nothing has changed on that. The project is on kind of called care and maintenance, but it's really to kind of rehab some of the work at the old Alumbrera installation and then working on the permitting for the new kind of Mara project, including the Agua Rica porphyry.
The capex is approximately, and this was 2019. So with ramp up inflation, it's probably quite a lot higher than that. But it was 2.4 billion, and you own more than half of that. And you say that the corporate is not it's not a metal that you focus on. Is that saying that you would likely sort of exit, or would you actually have an intention to build it sometime at some point in the future?
As I said, look, copper is not our primary focus, and the question here is really what's how to create most value for our shareholders, and that's what we will follow. I mean, if the answer is that most value is created by exiting the project and leave it with somebody who is really focused on copper, and we will focus on our large silver development projects like La Colorada Skarn, then that will be the decision later on. But as I said, don't forget we only own it for just 2 months today, and so it will need a little bit more time to come up with the conclusion for it. But we are looking at all different opportunities and possibilities for the project.
Thank you. Well, I agree with you that La Colorada Skarn is probably the most excellent fit for Pan American. It's at a size, and it's actually a greenfield discovery on your end, and it's silver as well. Moving on to the capital structure, it has changed a little bit since you inherited a large portion of debt. Although, I mean, we got two large bonds with long maturities and low interest rates, so I guess you don't see any benefit in repaying those. But you have also increased, drawn more from your sustainability-linked credit facility. Are you looking to repay a bit of that more higher interest debt, or could you add some color on the capital structure?
Yeah, absolutely. As I mentioned, we are, I like to run a company with a very conservative balance sheet, as uh, makes a lot of sense in the mining industry because it's a very cyclical business, right? Very exposed to cyclical nature of metal prices. So holding huge debt is normally not what works very well. This is a little bit different. As you mentioned, there are two bonds at very attractive interest rates. The largest one at a 500 million is 2.63% interest until 2031. Of course, that's a very easy debt to service for us. Even the second one, $283 million bond at 4.625% interest until 2027. So right now, Moody's and S&P assigned an investment grade rating to Pan American Silver, and those bonds will just run their course. So, but then you mentioned on our line of credit, which of course has a variable interest rate. We have drawn about $325 million, and we already started actively paying back on that line of credit. Of course, when you close a large transaction, there's a lot of movements. We announced at the beginning of or at the end of Q1 or beginning of Q2, $325 million drawn on that line of credit, but we also holding over $500 million in cash and cash equivalent. So we started paying back that because the interest rate is quite a bit higher on that line of credit. So I would see, this line being paid back here as quickly as we can. The bonds, as I said, not an issue at all to have that very attractive bonds in place.
We will now move on to the second pillar of Pan American's investment case, the assets. Pan American has 11 producing mines and a great deal of development and exploration projects, so we will in the Q&A session focus on the most important assets in terms of net present value, which we have estimated by performing a DCF analysis on each of Pan American's mines. The producing mines we will discuss are Jacobina, El Peñón, La Colorada, Shahuindo and Timmins. But we will first ask questions about Escobal and the development and exploration project La Colorada Skarn. As previously mentioned, Escobal is a tier 1 silver deposit with a 20 million annual silver production in the first years and a net present value in the range of 800 million at $25 an ounce silver and a 9% discount rate. If the silver price would go up to $30 an ounce, that NPV would go up to almost $1.2 billion US. In other words, it gives Pan American an unmatched optionality compared to other silver peers, which is why we will begin to investigate how likely it is that it is restarted and how long it would take and how much it would cost. Moving on to Escobal, would you like to give us an update on the status of the ILO 169 consultation process?
Sure, and look, Escobal is very interesting. As I mentioned, it came to us through the acquisition of Tahoe Resources in 2019. It was not only Escobal, but it's also La Arena and Shahuindo gold mines and the two Timmins gold mines in Canada. The former two are in Peru. That came to us. Actually, a very interesting structure when we did the purchase, because as Escobal was already on care and maintenance while we purchased the project, we decided to structure a contingent value right, the CVR, for the kind of the Escobal portion, because I couldn't really ask Pan American Silver shareholders to pay for an asset that is on care and maintenance. I couldn't really, ask at that point Tahoe shareholders to let it go at really no, or a very small payment for the best already built silver mine. So the contingent value right has been issued, one right for each Tahoe share, and those CVRs will be exchanged for Pan Am shares, about 15.6 million Pan Am shares at that point, when we send or ship the first concentrate from the mine. So basically, when the mine is de-risked again and operating again, we will, as I said, pay out about 15.6 million Pan Am shares. Actually, quite a modest price if you think that at that point we'll actually pay for the mine, and it will add over 20 million ounce annual silver production. But at the moment we are going through the consultation process, which has been court ordered after Tahoe Resources had quite some issues with indigenous and local population. We really worked the last 4 years on repairing those relationships. There's still more work needed, but for sure large advances in the past. We go actively through the consultation, which is a very inclusive process. Actually, there was a meeting just yesterday. I think the next meeting is in again in about 3 weeks. It's run by the government of Guatemala, by the Ministry of Mines, so it's not under our control. So I don't have the timing. I know everybody asked me when is it done. I don't have the timing for it, but I can tell you when you look at Escobal mine and the fact that it's already built, we'll probably need about $60 to $80 million working capital to restart it, but that's very, very, very modest. It's already built and ready to go for a mine that's going to produce over 20 million ounces a year. It's worthwhile to wait and take the time and get this done the right way and make sure that there's support in the surrounding areas for the project again.
If the mine license is reinstated, how quickly would you be able to start up the mine?
We're thinking in probably about 3 to 4 months time frame until we have some kind of production. But it would take probably the better part of a year to go back to the 20 million ounce plus production. We have to hire workforce, of course, train people again, replace some of the mobile equipment, but everything else is in top shape. We're maintaining the plant and the major underground access month by month. This part of our management plan, of our environmental management plan that is agreed with the government for the care and maintenance. And we're spending probably about $20 to $21 million a year on that to maintain everything in good shape, so we can restart in relatively short order should we get the go ahead for it.
Could you just quickly explain your main initiatives to repair and form a better relationship with the local community and the Xinka indigenous community in particular?
Well, the biggest one is really our open door policy, and that's not only in Guatemala. It comes, of course, from the top. And my door is closed right now for the interview, but normally my door is open at the office as well. That's really the way we talk to each other. There's a lot of communication going on. As I said, I worked in mines in my early career and exploration, so I know what needs to be done. So does everybody else here, and fluent communication and open doors is absolutely crucial for that. And that's the same with the communities. You have to inform people. You have to let them know what's going on. You have to explain and openly show what's going on, and come up with solutions uh, if there are any issues. So I think that's really the biggest change when you look at Tahoe, which had quite a lot of fencing around and a lot of kind of protection of the mine. This is really not necessary. The mine is producing concentrate, doesn't produce doré bars, so you don't need that kind of protection. We really changed that, opened our gates. We actually have quite a few thousand visitors already. As the mine is in care and maintenance, we actually organize uh, one in the morning and one in the afternoon, like a mine visit that people can join. We have a visitor center there, and we explain the process in the plant and underground, how modern mining works. And that has been a great opportunity for us to showcase the mine, something that is not easy possible, right? There's no modern mines actually that you can visit very easy. And it's a real eye opener, uh, not only for the population surrounding the mine in Guatemala, but it would be a real eye opener for a lot of the world population to actually experience and see a modern mine. But normally they're running, and it's not that easy to gain access and get a visit to one of these mines. But it has been a really, really great help for us to start all that communication with people around through this visit.
Moving over to perhaps I haven't asked you that, but perhaps your favorite project, La Colorada Skarn. And you actually mentioned in the presentation that it would be producing, you would target a throughput of in the range of 25 to 30,000 tons per day, and the mine life should be somewhere around, I don't know, 40 years. That throughput times that many years would be a larger resource than your current inferred and indicated resource by at least 100 million tons. So this brings me to my question about La Colorada Skarn. Since the cutoff date, which is roughly 1 year ago for the mineral resource estimate, how has your understanding of the deposit changed since then?
Yeah, look, we published quite a few press releases with real results. Actually, we discovered some really high grade intercepts as well. Some I would call it bonanza grade really intercepts, wide intercepts of up to 600 grams silver and I think 30 to 40% lead zinc. So pretty impressive grade. But nevertheless, the whole ore body, of course, is so large. It has a much lower average grade than what we're mining right now from the narrow veins. Um, we'll publish a new update on the resource here. We didn't find an end to it really. I mean, we're just drilling further out, and it's growing. Um, so I think seeing that size increasing is very easy. When you look at, we decided now as a mining method probably to go with a sub-level caving method. That's really the only way to get to that kind of large throughput. And the cost that we assume for that mining method all in is about $45 per ton, so very low cost. And when you look at that low cutoff, of course your ore body grows even further. So that's where we get to the tonnage and the throughput. Um, a mine when at that early and with the exploration that early, that will easily grow over decades further, as we know from our step out holes that it's bigger. We need to do some more infill drilling to bring that all to measured and indicated level, of course. But that's the work over the next few years to be done. But as I said, this will be a mine which will go way beyond my lifetime, and it's for sure one of my favorite ones. It's not the only one. I think there's a lot of really interesting optionality and projects in Pan American, but this is kind of like the 100% homegrown one with full discovery, 100% discovery below our existing mine. So something that doesn't happen very often in the world, that somebody discovers a world-class deposit below an existing mine. Kind of that late in the process, and that's really singular for this, and that's why I'm so excited about it.
Thank you. Well, I'm also very excited about it. But so you already sort of almost covered my next question, which was after the PA has been released, and what are the next steps, especially in terms of drilling, permitting, and also a PFS at some point in the future.
Yeah. So what we envision for it, of course, next step would be kind of a PFS. We tend, when we do our economic studies, go way into big details. So this is not just like a very high level study. We worked several years on this. So even the first technical study we're going to release will be quite detailed. But there's some more work to do for sure. And then we can start, permitting for the big infrastructure, which is going to be large shafts for ventilation, twin ramp access. We need to build a new ramp access because our extraction with the current shaft is only about 2,200 to 2,500 tons a day. So what we can envision is a dual ramp and a conveyor in one of the ramps for extraction, just an easy way with electric energy to extract that big of a tonnage from an underground mine. So a lot of work to come over the next years, as I said. But let's stay tuned first for the PA. So we're going to have numbers on cost and capital and production plans, and then next step will come after that.
Steve, would you like to tell me about your career, both in Pan American, but also prior to joining the company?
Thank you, Jasper. My name is Stephen Busby. I'm the Chief Operating Officer for Pan American Silver. Actually, I'm a degreed mineral processing engineer. I've got a degree from the University of Montana Tech down in the United States. I come from a long lineage of family in mining. So I kind of followed suit. Although I went into engineering, most of my family were actual miners. I've been in the business now for 40 years. It's been totally dedicated into precious metals mining. I started my career out actually working in Nevada in silver mining. Went into gold mining. It's very, all the processes, all the mining methods are very similar. So, and I've worked globally for most of my career. In that 40-year career, I'm actually half of that now has been with Pan American Silver. So just coming up to 20 years with Pan American Silver and half of my career. Most of my early stages of career, I started off in operations and quickly moved into project development. And I'd been involved with many, many project definitions, designs, development, constructions, and into operations throughout most of my career, and working quite a number of places around the world. In lots in the Americas, obviously, lots in Africa, in Australia, in Asia as well, and Far Eastern Russia. Worked a lot of different mine developments. It's been a pretty exciting career. And now I'm dedicated to the operations. So at Pan American Silver, I'm responsible for operation projects, safety, environmental, tech services for the organization. It's quite a large organization now. We got nearly 21,000 employees and contractors in the organization with our recent acquisition of Yamana. And I think one of the interesting things that I like to tell people about my career is, and again, going back to my family roots in mining, is I've witnessed the global mining movement, if you will, migrate from the US into Canada. Canada became the base of global mining development during my career. And I too immigrated with that movement. So I left the US and came to Canada with Pan American Silver. And it's really, Canada is the center for global mining development. And that's why I'm here.
Moving on to your newly acquired mine, Jacobina mine, which is by far, in terms of net present value, your most important asset. Could you just briefly describe Jacobina?
Sure. Jacobina is a very exciting property for us. It's really a district. It's located in the Bahia state of northeastern Brazil, and it's about a 340-kilometer drive out of Salvador, Bahia, the capital of Bahia, in the kind of north-central part, towards a little bit west of Bahia, or of Salvador. It's actually a district. We describe Jacobina as really a district, and the concessions that we control there occur along 155-kilometer strike length, north-south trending strike length, along some very prospective stratigraphy that's hosting these gold conglomerate-bearing gold deposits that we call reefs. They're reef deposits. You'll hear that term a lot down in South Africa, but these are truly, they were placer deposits that had settled in and became conglomerate deposits. Very exciting, very, contiguous mineralization when you're onto it. So these have more extensive folding and faulting than what you might see down in South Africa on the Witwater Strand, but still similar type of continuous mineralization when you're on the reefs. They're very nice deposits to mine. The core mining area, Jacobina, occurs along that prospective 155-kilometer concession that we control, and there's 8 kilometers that have been developed that we're mining different deposits, 7 or 8 different deposits within that 8-kilometer strike. These are moderate dipping deposits. We use a long hole open stope mining methods. We're mining widths on these reefs that range from anywhere from 1.5 meters up to as much as 25 meters in width. They do occur virtually at the surface, outcrop down to, we can go down to as deep as 700-800 meters, some cases down to 1 kilometer in depth. Currently, the proven and probable reserves on the deposit, Yamana had stated at the end of 2022, is 42 million tons of ore at 2.18 gram per ton gold grades. The original project was built, the modern project I'll call it, was built in the 1990s. It has changed hands a few times, and it was originally built as a 4,000 ton a day mine. And of course, it's been expanded and debottlenecked several times since then. And currently, we're up to 8,600 tons a day. Is generally our processing rate. We're pretty comfortable at running at 8,600 tons a day as we finish up some additional projects on the site there.
You budgeted 26 to 29 million in project capex for this year, which some will go to the phase 3 throughput expansion, where you will expand the throughput from 8,600 tons a day to 10,000 tons a day. What is the timeline for the throughput expansion?
Yeah, so the project, we're completing what was known as the phase 3 expansion project, as you referenced, that Yamana had started back in 2022. And what's left to do there is we're changing out some of the screening machines in the crushing plant. We're enhancing the gravity gold recovery leaching circuit that we have. Quite a bit of the gold that we recover at Jacobina is recovered through a gravity process, and then we go to an intensive cyanidization on that gravity con. So we're upgrading that circuit a little bit. And then the carbon and pulp tanks downstream, the final kind of polishing and recovery of gold in the circuit, we're having to expand those tanks to accept this higher throughput and improve the interstage screening in those tanks. What we find is that we have to keep the operation steady at about 8,600 tons a day today until those projects are completed. Those will be completed towards the end of this year. At that time, we'll evaluate the circuit, we'll see how it's performing, we'll optimize that circuit, and we'll likely tweak throughput. We're not sure if 10,000 tons a day is the right throughput for this circuit in its current configuration, but we'll tweak it up a little bit from 8,600 from where we're at today, starting in 2024.
This is probably a couple of years ahead, but at least when Yamana operated operated Jacobina mine, or the Jacobina mining district rather, they thought about phase 4 expansion, which would expand the throughput to 15,000 tons per day. How are your thinking in terms of phase 4 expansion?
Yeah, great question. We believe the one thing that we need to really understand in this deposit is kind of combining all of the aspects, the exploration opportunities, the infrastructure that exists there, and the upgrades we'll have to do to that, the operation in terms of staffing and competencies and capabilities, the environmental impacts, the social impacts, and try to come up with the right combination of these things through a carefully systematic optimization process on a long life asset like this. We want to make sure that we're considering business sustainability into the long term. That's what's going to drive the maximum value of this mine. So we don't know what the right throughput is for the long term. We think there's a lot of studies that have to be done before we really find that. We see some exciting opportunities, as we mentioned, this long strike length that's relatively unexplored. There's many opportunities. So logic would suggest that someday in the future there is a sizable expansion opportunity there, but we really need to go through the optimization studies before we can really put definition to what is that. What I would say in the meantime, we got an incredibly competent and enthusiastic workforce operating that mine, and we're working incredibly well with them. And kind of the valuations we saw when and this did attract us to Yamana when we originally looked at the valuations here, we're quite comfortable that those valuations are going to be realized, and there is opportunity to enhance those valuations as we look forward.
With that, I would actually like to move on to perhaps the second most important operating or producing asset, El Peñón. Could you briefly describe El Peñón? And sorry for my pronunciation; that's probably quite incorrect.
El Peñón, no, it's again a very interesting property. It's located in the Atacama Desert, a very arid part of the world in northern Chile. The mine is currently an underground. There used to be some open pit operations there in the past. Today it's strictly underground, and we use a bench and fill mining method with a conventional leach circuit, mercurochrome, and a filtered tailings facility, which is quite interesting. That was one of the first to use it at El Peñón when they built the mine back in 1998. The mine was originally constructed as a 2,000 ton a day operation, and it's obviously been expanded. And it actually peaked throughput when they were running the open pits at about 4,200 tons a day. Currently, we're operating the mine pretty steadily at 3,750 tons a day. We're quite comfortable with that rate with these underground deposits. Average grade this year, we're expecting somewhere around 120 grams silver, which we like a lot, and about 4.5 gram gold. So it's got a very nice grade to it. These are low to intermediate sulfidation epithermal vein deposits. They're steeply dipping veins. They can range in width from tens of centimeters up to as much as 20-meter widths, and they occur. The strike lengths could be as much as 4 kilometers in some locations. Quite long strike lengths along these, and the depths we mine there can be anywhere near surface down to about 350 meters. I think our maximum depth. We do think there's some opportunities potentially at going deeper there if the exploration plays out well. We think that's a nice opportunity for us. These mines, there are a series of these veins, quite a number of veins that are mined on this deposit. And as the deposit's matured from its original development in '98, it's getting pretty spread out. So there's a lot of annual development necessary. We'll probably be developing over 40 kilometers of underground developments this year to sustain production. So it's quite intense development. And so we're focusing a lot of exploration down in some prospective areas where Yamana had discovered some potential mineralization at depth that looks quite interesting to us. So we want to really focus our efforts on that and try to find a future plan where we can bring the operation kind of more centrally together again rather than spread out. We have a few operations within Pan American before the acquisition where we started spreading out quite spatially, and we find it just leads to some inefficiencies. So if we can find exploration, we're putting a lot of effort into brownfield exploration this year. If that proves successful, we see avenues to potentially bring this into a centralized operation again, and that'll lead to greater efficiencies, lower costs, and certainly add a lot of value to this asset.
When we're talking about production rates, you mentioned that the mill is currently running at 3,750 tons per day out of 4,200 tons per day. How is that compared to what's your average mining rates?
Yeah, mining, the actual stope mining, we're probably in about 3,000 tons a day mining rates, and then we do have development that we do develop in some ores that we add to that, and then we have a stockpile that we supplement to get to the 3,750 tons a day. Again, I think that's kind of our sustainable plan going forward, barring some success on the brownfield exploration side.
Let's move on to a household cornerstone asset of Pan American, La Colorada. Could you just briefly describe the La Colorada mine for the viewers?
Absolutely, yeah. La Colorada, Pan American Silver acquired La Colorada back in 1997. It's been a mine that had been mined for many years, traded hands over the years through different groups that mined there. In 1997, Pan American took it over and started investing. There's been significant investments made in mine infrastructure, and we actually built both an oxide leach circuit and a sulfide flotation circuit, and been growing the reserve around these veins. In addition to the skarn that you mentioned, the vein reserve itself is quite an important reserve to us. This is our biggest silver producer for the company. It's kind of our cornerstone asset. This year in 2023, we're forecasting to produce between 5.5 to about 5.9 million ounces of silver at costs of about $17 to $18.50, all in sustaining. It's a 2,000 ton a day operation, roughly. We're currently mining at about 270 gram silver grades.
One issue has been the ventilation at La Colorada, especially as the Candelaria zone. So what measures are you taking in order to resolve that ventilation issue?
Yeah, and it's quite an interesting issue for us. The fundamental issue is really brought about because of the ground conditions. We're mining through some very weak ground, this volcanic dacite ground. And what we discovered, what we now believe, looking back in 2015, 16, 17, we started to see a lot of our long-term ventilation infrastructure, primarily our big raise bores that we use for primary ventilation, started to fail on us in this ground. And what we now believe is that as we mine deeper and further to the east on our high-grade Candelaria zone, the air quality conditions underground became more warm. It became a heated air, and it had a lot of moisture. And what we're now seeing is that hot, moist air actually accelerates the deterioration of the ground in this weak dacite unit, and that's what caused the issues that we have on ventilation. We tried numerous times of replacing raise bores that had failed, and some of these raise bores had been in service for more than 10 years and they failed unexpectedly. We've tried to replace them, and as we try to move this hot, moist air out, these raise bores we can't keep the ground supported. So what we ended up doing in 2021, we decided we need to sink a shaft, a cement lined blind shaft from the surface, that we can have something that we can rely upon for the long term for this ventilation. So we started a 5.5 meter diameter cement lined shaft excavation that's going to target directly above that eastern deep Candelaria zone. And that allow us, once we complete that project, to ventilate, exhaust all that hot, moist air directly from that zone right to surface and draw all the cool air. We also, in 2021-22, we built a refrigeration plant that helps dehumidify the air, helps cool that air, again, helps sustain longer term ground control in this poor, weak dacite rock unit. So the combination of those things and exhausting that air through this new raise bore will give us that confidence and that ability to have reliable infrastructure there going forward. So this shaft today, we've now surpassed the 300, more than halfway. We're more than halfway through the shaft, 350 meter, 15 meter deep. We expect to complete the excavation of the shaft by the end of this year, and then we'll have to pull the head frame and all the infrastructure off the top of the shaft, and we'll equip it with some very large ventilation fans. And we'll commission those fans right now. The schedule's for around mid-24. Once we have those fans commissioned, then that will give us more than sufficient air and cool air into that Candelaria zone where our high grade is. So in the meantime, we've been able to sequence the mine to where we still mine at the 2,000 ton a day rate. We're just having to mine at lower grades, as I mentioned, 270 grams rather than the 320 gram that's roughly our proven and probable reserve grade.
Could you briefly describe Shahuindo for the viewers?
Yeah, Shahuindo is a very, very exciting mine as well. Gold mine. It's in the northern part of Peru in the Cajamarca region. It's a mine that we acquired through the Tahoe resource acquisition that was really targeted to Escobal in Guatemala. We also got a gold mine. We got two gold mines in northern Peru, La Reina, Shahuindo, and then the gold mines in Canada as well. At Shahuindo, Tahoe had built an open pit heap leach operation that was designed to process 36,000 tons a day. They were in the middle of commissioning when we took control of this. So we completed that commissioning. We've been operating it ever since at the 36,000 ton a day rate. This year, we're forecasting to produce between 134,000 and 146,000 ounces of gold at an all-in sustaining cost around $1,300 to $1,470 an ounce. We process ores at grade just under a half a gram by 0.45 grams this year. It's a run-of-mine heap leach facility. One of the key aspects of that operation, Tahoe did build an agglomeration plant for the mine because there is some high clay, some very fine ores. What we found is there's also rock, there's sandy ores that we found a better approach to this is blending the ores going out to the run-of-mine heap, and we've been quite successful with that and avoided the commissioning of that agglomeration plant, which adds a lot of cost because with agglomeration you've got to add quite a bit of cement, and that adds quite a bit of cost to the operation. So through our blending efforts, and that's kind of what we focus the day-to-day operations on, is blending both for grade and for quality of material for percolation on the heap leach. It's been an incredibly successful mine for us. We're very happy with that one.
One thing that I've noticed is that you have guided for remarkably high sustaining capital expenditure at Shahuindo this year, 72 to 74 million. Would you mind explaining how the capital will be spent?
Yeah, it is a heavy year for us this year at Shahuindo. Kind of everything's come together, and this year we're having to do quite a big leach pad expansion project. There's about 30 million of that 72 to 74 that's going to the leach pads. There's a new waste dump that we're preparing, and our preparation of these waste dumps, because we're in a high intense rainfall area, we have to do a lot of drainage and diversion and preparation on waste dumps. We got about $11 million we're spending there this year. And we got a water treatment plant below our waste dumps that we're building to treat the water before it's discharged. And that's about $14 million being spent this year. The normal things, there is quite a bit of gear deployed at this open pit mine. We've got about $7 million of equipment replacement in the mine that we're doing. And then there's some more lands that we're acquiring in the area, and there's about 5 million. Those really make up the majority. And as I say, it's a heavy year, so it's kind of all come together, and it's 72 to 74 is not what we would normally expect in a typical year. But leach pads and dump preparations, those are expensive items for us.
Would you mind to briefly describe the Timmins mine?
Yeah, so Timmins mine is actually two mines. We have two underground mines there called Bell Creek and Timmins West, and they're separated by about 56 kilometers, with the city of Timmins in northern Ontario kind of situated in between the two mines. And we mine from Timmins West, and we haul that ore to Bell Creek, where we have a plant. And we have a milling facility at Bell Creek that's currently capable of processing about 4,500 tons a day. And we bring both ore from Bell Creek and from Timmins West to this facility. Again, this was a property we acquired through the Tahoe Resource Acquisition in 2019. Very nice mine, very nice place to work, very mining friendly environment at Timmins. There's a lot of mining going on there. And this year we're forecasting to produce between 130,000 and 141,000 ounces of gold at a cost of between $1,650 and $1,800 all in sustaining. We're forecasting mining pretty close to reserve grade, about 2.7 gram per ton gold on those two mines combined.
As you mentioned, the all-in sustaining costs are elevated, which is particularly because of wage inflation. I could assume that the competition for skilled trades is quite high in Ontario. But what room do you see for cost savings and lowering the all-in sustaining cost?
Yeah, so as you mentioned, I mean, there's tremendous competition for qualified mining professionals in that part around Timmins. There's lots of new mines being built, big mines being built, and then existing mines that are expanding. So the competition for employment's quite intense. And we've been doing a number of things in making our positions more attractive in terms of benefits of time off and wages as well. We have to maintain our competitive wage to maintain our workforce there. It's a wonderful workforce. It's a great problem for the city of Timmins to have. Everybody in Timmins is quite happy about it, but it is leading to higher and higher costs for sure. So what we focus on is looking at investing in items that can reduce our costs, investing in equipment that can improve productivities and reduce costs. But probably our biggest area that we're focused on investing is, once again, exploration. We see some opportunities on our concessions of finding some nearer surface opportunities. If we can put that together, and both Bell Creek and Timmins West are quite deep mines. We're mining, in some areas below 1,200 meters from surface at both of those mines. So whatever we can do to get closer to the surface can really lead to some cost efficiencies there. And we see those opportunities. So we are focusing efforts and investments in brownfield exploration. And we're hoping to be able to, over the next few years, put together some new areas of mining that we don't have to go as deep on, and that'll really help reduce our costs, our all-in sustaining costs.
We will now move on to the third and last pillar of Pan American's investment case, which is its strategy and vision. And we're among others going to ask questions on Pan American's investment in New Pacific Metals and how they are thinking in terms of portfolio management, which is of great importance since their portfolio was expanded considerably with the acquisition of Yamana Gold. There is a 9.4% equity stake in New Pacific Metals, and they are rapidly advancing the silver sand project. They might even, according to at least what they're guiding for, they want to begin construction within sort of roughly a year. And with 16 million ounce silver production in the first 4 years, it's definitely meaningful for you if that would be in your portfolio. So what are your thoughts on the investment in New Pacific? Because you have actually been reducing the size of it in the past.
Well, we actually financed the first drill campaigns at Silver Sand, and that worked out really, really well. The New Pacific share price increased very, very quickly, just because it's so difficult to find high quality silver deposits. But it reached a level, and that was like right during COVID time, where I looked at it and I said, look, I'm not really a buyer at that kind of price level. That's why we reduced a bit. It did not really change the strategy behind why we became a shareholder in the first place. So the idea is really to find, decide over the next years if this are projects like Silver Sand and Carangas, they're projects of the size and quality that we are looking for. We like Bolivia. We have been active in Bolivia for a long time. I think since 1996 or so, or 1998. Sorry, at our San Vicente mine. So Bolivia has been, a very good jurisdiction for us. So we definitely would look at possibilities to grow there. But our reduction in ownership, had nothing to do with the strategy. It was really much more a market reaction. And when you look at it financially, we actually recovered all the money that we invested and still hold 10% of the company. So it has been actually a very good transaction. I think the valuation is for from our point of view in a much better level right now. And I'm really waiting for more technical results on it to make a decision if this is a project that we want to gain a much bigger exposure to and work on it in the future. As I said, Bolivia has been a very interesting jurisdiction for us.
You have La Colorada Skarn, you have Mara, you have La Arena 2, Escobal, Navidad. You have a great deal of development projects in the portfolio already. And you also have a bunch of larger producing assets. How are you thinking in terms of portfolio management? Are you consider divesting marginal assets, or perhaps a couple of your large sort of development projects that are in care and maintenance, such as Navidad and La Arena 2?
Well, and definitely, La Arena 2 is really like we're mining actually the oxide gold on top of it. So we have been very successful with exploration there. When we purchased La Arena through the Tao acquisition, we actually assumed that it will be mined out in 2021. I think we'll mine now oxides there until 2026. But at one point the oxides will be mined out, and then La Arena 2 will be the sulfides below that. As I said, probably not a good fit for Pan American because it's mostly copper. It's a very large, interesting project, just not something we are focusing on. Look, definitely we'll go now after this acquisition. We'll be now going into a phase of portfolio optimization. We'll divest some assets. There's a lot of different projects, as you mentioned. There are many, many more on the exploration side, and all kind of stages. There's a lot of interesting companies taking some of them on. So that's really that our business development team is now focused on. Kind of understanding exactly what how everything fits together is the next step, and then of course finding the right buyers for them. We normally divest for cash or royalties. We're not interested take a lot of equity from other companies, unless they're very large companies. Of course, then we would do, but not of junior companies. So when we're talking about smaller exploration plays, we'll probably divest them for very little cash, because the money should go into the ground, but retain royalties. You probably remember we started actually a royalty company way back in 2016, 2015 called Mavericks, and that worked out really, really well for us. We divested out of that now. Mavericks got sold to Triple Flag, but with a royalty investment of probably $10 to $15 million, we actually achieved about $152 million out of that transaction. So I like royalties. Royalty companies pay you good cash for that, and that's what we are focusing for the smaller things. Bigger assets, if we decide to let them go, of course, depends how big the company is that is interested in that. As you can imagine, a big copper porphyry development project like La Arena needs, of course, a big company to build that. Those kind of projects will require several billion of capital to put them into production. But just assume now that over the next, I would say, 6 to 8 months, we will focus on portfolio optimization and selling assets that are not a good fit anymore, and focus on a bit a smaller Pan American in the future. Not smaller in market cap or importance, but a bit smaller in terms of assets in the portfolio.
Okay, this brings me to my final question. Where do you envision Pan American Silver in 5 years?
Yeah, look, I need to focus on much longer terms than 5 years running a mining company. This is a long-term business. It takes a long time to discover and find something and put it into production, get a permit to put it into production. So my job is really to think in the next 10, 20 years and beyond that. But lots of shareholders, they look at different time frames. Some people look at a few quarters, some people look at a few decades. I think in the next 5 years, you're going to see a lot of optimization of our portfolio. There will be changes there, really focusing on the high quality assets that we have. Of course, we'll advance La Colorada Skarn. That's going to be very important for us, and it's as we discussed before, a very exciting project. And just in general, continue to work our ESG journey here. We're working on this for a long time, since way back, way beyond the last 15 years, and we'll continue to focus on that. Of course, it's on everybody's mind, and it's getting more and more important, and not only in the mining sector, but of course for the whole world, that we do the right things on this side. For any industry and any individual, actually, to bring us on this journey where we need to go. But metal's going to be absolutely critical to actually be successful on that journey. So that will be our focus, providing the silver for the world, for the electrification, and for the future changes.